What's up, everyone? This is Andrew with Spark Finance here, bringing you the most important business news, the business breakdown of the past week. To start off with, we are going to go over some of the GDP numbers. So, we had average GDP of countries in 2020 not faring the best because of the whole pandemic situation, but China actually had no problem. Their economy was up 2.3% on GDP growth for the year. So every other major developed economy in the world was down in 2020. That includes the United States, South Korea, Russia, Japan, Germany, France, Italy, Brazil, Canada, the UK, India. I mean, all of these economies were all down, but China was up. They're saying that the expectation, or the world average rather, is down minus 4.4% for 2020. The US is actually, the official numbers aren't out yet, but it's estimated to be down 4.3% for 2020. So how did China do it? How did they get growth when nobody else had growth? This was the area where the pandemic started, right? So how come they were able to do so well? They had that whole situation where they were literally barring people in their homes with steel girders so that they would stop the spread of the pandemic. So maybe that helped it and maybe they stamped it out. Or maybe it was the way they kind of changed the way that they were reporting numbers and they're just letting people go about their day-to-day business and we don't really know what the death rate or infection rate really is. But anyway, right now, by looking at the Chinese economy, they are estimated to surpass the United States economy in terms of GDP by the year 2028. So this was just recently moved up. It was 2030 by economist estimates. Now it's 2028. And I remember a little while ago, it's funny how this works. It's always moving up, you know. A little while ago, it was 2050. It was supposed to surpass the US economy. Now it's 2028 minus, a couple of years. In a couple of years, it's going to be on parity. So why don't they just say tomorrow is the estimate, right? Then Amazon has some good news about their subscribers. They have 142 million Amazon Prime subscribers in the United States. So one of the interesting parts of this is that around the holidays, a lot of people sign up for this whole Amazon Prime thing, but just for a couple of months, and then they get rid of it. This time, it seems like people are actually going with the full year subscription for Amazon Prime instead of just signing up for a couple months. And as a percentage of the overall total number of subscriptions, the full year amounts are 52%. So that's pretty big right there. And Amazon, if you're looking at them, I mean, in the past year, their stock is up 67%. So they're benefiting greatly from this whole situation around the lockdowns and people ordering from home. Next up, we have some information coming out from an unusual partnership between Microsoft and General Motors, Government Motors, right? So Microsoft agreed to a strategic partnership with GM and Honda to accelerate bringing driverless cars to the world. So that's a very important new technology. It's supposed to be on the forefront, right? The big addition here is that Microsoft is going to leverage their Azure cloud platform with the auto manufacturers. They're going to kind of both work together and make this become a reality. So GM, they love this news. This made the stock jump 9.4% when the news came out. It actually hit a new all-time high, never been that high before. And Microsoft is specifically going to help them on their driverless car startup called Cruise. So we were just speaking about, I believe, last week's video actually, where they had GM reaching a new high. And this is after coming out of bankruptcy a decade ago and having their IPO, and now they're hitting all-time highs. So it's pretty crazy there. GM stock is up 31% for the year. And then if you're looking at something that's going on with the overall economy of the United States, we just had the announcement that Janet Yellen was going to be sworn in. She was going into the U.S. Treasury Secretary position, right? In charge of all of the debt of the United States and how our spending is going, right? That must be a tough job because in the past 4 years, we've added $7 trillion to the national debt. That's an enormous sum right there. And the national debt figure is now up to $21.6 trillion for the national debt. And this is a significant milestone that we just crossed. It's 100.1% of GDP. So there's this kind of ratio where you look at how much of the debt is of the GDP, how much we can produce in a year in terms of goods and services. So the debt now consumes more than we can produce an entire year of all the industries in the United States pumping out goods and services. This is something that people had looked at when Japan went into this situation where they were over 100% of GDP, and they had what's known as actually the lost decade, right? So it turned into a couple decades of basically no economic growth. And the problem is that debt is like an anchor that weighs down the ship of economic growth. Instead of building and innovating in an economy, you are instead taking your time and your money and paying back debt, which is on money that you have already spent. So instead of using it towards productive means, you're using it to pay back debt. And don't forget, we also have all of these trillion-dollar stimulus plans coming out that are unfolding now, and they are adding to the debt as well. So 20 years ago, the federal government debt totaled 30% of the nation's gross domestic product. Now it is 100%. If the current trends continue, the debt will be double the nation's GDP by 2050. That's not a good milestone to reach right there. Of course, this is never really a problem. We can just keep spending like crazy until that one day when we hit the turning point, and then everything could fall apart. Electronic vehicle sales. So electric vehicles actually are very important. It's the new trend right now. And if you're looking at the sales in the United States, Tesla sold 4 out of every 5 vehicles purchased in 2020 that were electric vehicles. So the electric vehicle sales in China also went up 9.8% last year, and a whopping 89% in Europe. I don't know what caused that to happen. So you're seeing these EVs really picking up, and a lot of government institutions are putting kind of criteria that you have to go to these more globally climate-friendly vehicles. Thinking about this, Tesla just started delivering their Model Y vehicles in China. So this is the plant that's only been open for 2 years, and now they're making their second vehicle. This is really fast production there. The Model 3 from Tesla sold 138,000 units in 2020 in China. Now, if you're looking at some of the analyst estimates, they said from Webush that 40% of the Tesla's sales are going to be in China going forward. So that's pretty significant right there. And they also estimated that it's just going to kind of pick up, and they're going to do 1 million units in deliveries for 2021. Remember, they did 500,000 deliveries in 2020. They were just under that, but we'll give it to them for that milestone, 500K. So Tesla, when you're looking at the market capitalization, if you look at all of the 14 major automobile manufacturers, you have Tesla on the top with the largest market cap. Then if you count the next eight highest market cap automobile companies, that's what would equal Tesla's market cap. That's how far ahead it is from everybody else. It's pretty crazy right now. Jumping to the COVID deaths, we now have 2 million people worldwide that have succumbed to COVID-19 and have passed away. The US death toll is the highest in the world at 399,003. We also have, I think it was 21 million cases now of the virus, so that's also not a good sign there. But hopefully with the vaccines rolling out, things will get better. Things are going well for investment banks. Morgan Stanley had earnings that were up 51% from a year earlier. Their profit was $3.39 billion, or $1.81 a share. They also had revenue of $13.6 billion, which was up 26%. So these are great, like double-digit numbers here. This is another bank that was greatly helped by the rising stock market and the craziness and all of the financial assets going up, right? But where did they make their money specifically? We want to look at that. We want to know what's making them tick, what's making them do so well. So stock and bond trading was up 32% to $4.22 billion. That's the biggest of any of the major banks. They made $5.2 billion from wealth management, $2.14 billion from trading stocks, and $1.46 billion from fixed income or bonds. And see, they made a lot of money from the stock market, right? Because when the market goes up 60 to 80% from the pandemic lows, I mean, it's pretty easy to make money there, right? When everything's going up. The earnings were also helped because they did the acquisition of E-Trade, which was one of the kind of online discount brokerages that's now become part of Morgan Stanley and their brand. Their largest section right now, they actually have the largest wealth management business of the 6 major U.S. national banks. So their really getting into this, personal wealth management and kind of dominating in that market. In 2020, their stock was up 33%, and it looks like it has a nice kickstart to 2021 with those good earnings at the end of Q4 there. And also, all of these crazy hot IPOs that we were talking about in previous videos, these are helping companies like Morgan Stanley and the investment banks because they act as underwriters on these offerings. They make money on them as well. So that's pretty good for there. Now, looking forward to the future of the business though, the chief executive, James Gorman, he actually said, whether it is at the level of 2020, you have to bet against that's just on pure odds. You have to bet against what they did this time, and having it again is just not going to happen. So the other investment banks, you had Morgan Stanley do well, you have JP Morgan do well, you had Goldman Sachs doing well, all beat the analyst expectations. Then you had Citigroup, Bank of America, and Wells Fargo. They all disappointed on revenue, and Bank of America's stock fell 22%. Their profit fell 22% in the quarter, and their stock got beat up because of it. And looking at Goldman Sachs, another investment bank, kind of like Morgan Stanley there, they had blowout earnings. So their fourth quarter profit doubled from last year to $4.51 billion, beating estimates, right? And just like the other investment banks, we saw a high, trading revenue going way up. And it was actually, for Goldman Sachs, at a 10-year high for their trading revenue. They haven't done that in a long time, in a decade. So we're seeing that continue with the big banks. Then we have Jack Ma making an appearance. So Jack Ma's been missing, or he's kind of been laying low for a while. And the spotlight has been on him because people were wondering, did the Chinese government go against him because he said some stuff against the Communist Party in charge there? Did they make him disappear? Well, he was actually on a video bridge for one of his charitable organizations, so he made an appearance here. He's still trying to lay low so that he doesn't get taken out by the people with the real power in the economy. But this is big news for Alibaba, which we had talked about in other videos. Alibaba's stock was actually up 8% of the news of him just showing his face. And remember, we still have that Ant IPO, which is potentially coming out, but the Chinese regulators put a halt to it. So we have to see, that could be the world's largest IPO. And it's kind of crazy. People were cheering here that he did not end up in a re-education camp. So that's a good thing. But looking at Alibaba's stock, it started up it was up 8% or whatever. And then by the end of the week, after a full week, it was up still 5.7% to around $258.68.